Hello traders and welcome to another video review. Today is Tuesday, November 28, 2023. Let's take a look at the Forex economic calendar for today. As you can see, I have only the very important and the medium important event on my calendar. So what are we looking at? Retail sales from Australia had been published overnight, and the actual reading was minus 0.2%, which is way below the forecast of 0.1% and way below the 0.9%, which was the previous number. So I think we should take a look at the Australian dollar today. We got data from the JFK German consumer climate, which is deteriorating to minus 27.8, which is just slightly better than the forecast. We'll have a speech at 9 o'clock from German Buba President Joachim Nagel. Then at 1:30 p.m. we got the ECB McCall to give a speech as well. At 3 o'clock during the New York session, we got the data from the USA in form of the HPI composite index, and then the key event of today is scheduled for release. CB consumer confidence, Chicago board consumer confidence data, 4 o'clock p.m. Then 5 minutes later, Fed Weller will give a speech, and 40 minutes later, FOMC member Bowman will give a speech. At 5 o'clock, we got a speech from ECB President Christine Lagarde, and then 1 hour later from the MPC member Haskell. At the end of the day, we got 7-year note auction from the USD. Which is from the USA, of course, nominated in the USD. And then 30 minutes later, we got the ECB Lane to give a speech. At the end of the day, API weekly crude oil stock change is scheduled for release at 10:30. So let's now find out what's going on the euro dollar, and then we'll take a look at the Australian dollar for sure. 30-minute chart of the euro dollar is showing us the reversal from the 61% of the Fibonacci retracement at 1.0962 again, and right now we are just heading towards the extremely oversold conditions, but this is 30-minute chart only. Let's switch to the 4-hour. As you can see, as expected, the 4-hour chart is showing us that the level of 61% had been tested again, right? That's not a problem. It has been tested. Let me just show you guys that again. So this was the first time, roughly, in one day, and that was the second time. That was the third time. Basically, if 1, 2, 3, 4, 5 times on 4-hour chart has been tested already, but let's say 2 major ones are here, or at least 3 major ones. Okay, let me just copy this one. So we got 3 major tests of this level, and 3 times it was rejected. First rejection was as deep as a few percent, I guess, but let me just take a look how much exactly. I think it will be like 1%. There you go, 1% rejection first one, then the correction, second rejection very small, and now there's the third rejection. Intraday technical support, let me just take a look here. We got this intraday technical support a little bit higher because it's located roughly around 1.0931 and 1.0927. So that's the intraday technical support. Any violation of this level would likely means that we are deteriorating even lower towards the technical support at 1.0888 and then even 1.0853. The negative divergence is still on the 4-hour chart, is still present on the 4-hour chart. Right now the RSI is 54 points. And we are heading towards the level of 50, which is of course the neutral level. Any breakout to the downside will open the road to the lower levels. There is a room to the downside on the RSI on the 4-hour chart. There is a room to the downside on the euro dollar. It looks like the bears are in charge of this market because just recently the 61% of the Fibonacci retracement had been rejected. Okay, that was the euro dollar. Let's switch to the Australian dollar. what's going on the Australian dollar. This is the 4-hour chart. Let me just switch to daily first. On the Australian dollar, we can see that the market is trying to move higher towards the level of this technical resistance, basically, that was violated just recently. 6,598 pips. Okay, so that's the technical resistance, which is why it's red. Now there is a slightly higher. There's another level, 6,617. So this is a very strong zone, the supply zone. Okay, based on the historical data from the middle of the June 2023, we broke above this zone, but there is no candle close yet. This candle is still in progress, so we should wait for this candle to close. But local high is 6,634 so far. However, if this candle will become something like this, some kind of a pin bar, maybe shooting star, maybe doji, then of course we will have the first indication of the rejected technical resistance, and we should go a little bit lower. This is the technical support that should be tested very soon, 6,525. So that's the level where the market might find some kind of a support after this breakout to the upside would become a failed breakout, of course, right? So please bear with me while I'll be doing the updates for this market, of course, for the Australian dollar. Let's now take a look. We don't have any data from the Canada. Let's take a look at the crude oil, and we just made a analysis of the crude oil just yesterday, and as we expected, the market is moving lower. The market is moving lower ahead of the API weekly crude oil stock change. This very nice zone here is of course the key basically supply zone on the short-term time frame chart. This is daily actually, and as you can see, it works very good for bears, of course. The market has been rejected rejected from the level of 78.19, and we are heading lower right now. The momentum remains negative. The momentum remains below the level of 50, so the bears are in control of the market on a daily time frame chart, and lower levels are expected, like 73.79, and even the technical support at 72. Let me just take a look. 72.53 might be hit very soon. When we zoom out, okay, to see the bigger perspective, we can see that the 72.70 is the last level of a quite strong technical support. There is nothing until the level of 66.96 is hit. Okay, so there's a big gap here, big room to the downside, maybe I should say big room to the downside. So we apparently have only two major levels on the crude oil here. The one is roughly around the level of 66 point something, like 66.80. okay, so that's the big level, that's the big technical support, and the other one is way lower, and those are the lows of 2023, which is 63.69, roughly 63.69, 64.12. Okay, so if we break below this level again and there is a sell-off to the downside, then the next target is this technical support. If there is no significant bounce from this level, then we can even hit the yearly low at 63.69. Momentum on the daily time frame chart, negative, still below the level of 50, still deteriorating even further. So please don't expect this market to rally anytime soon, as the bears are in charge of this market right now. And last but not least, let's take a look at the Bitcoin. So the Bitcoin on the daily chart was rejected from the level of 37,000, 38,000 basically. Now it's even more than 37,000. 38,000 has been rejected, and let me just scale my chart. There you go. So we got this movement to the downside in progress as the momentum deteriorates towards the level of 57 points only. Nevertheless, if we place like a short-term trend line support, maybe even from this lows of the October, if we place this kind of a technical trend lines, okay, so we got the short-term trend line support, it looks like this, and if we copy that, then we can clearly see that, for example, from this low, the market just might be approaching this level here very soon. So there is still some room to the downside, but there is a potential support around $35,000, then around 36,500, then 36,000, then 35,646, and again there is a short-term trend line support as well. So the outlook still remains bullish, as the movement to the downside might be just a local pullback, local correction to the downside, to be honest, and when it's completed, we should see another leg to the upside on the Bitcoin as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.